Welcome friends, this is your recap for the week of March 30th, 2020. In this time of pandemic, questions have been arising around the use or potential cessation of use of cash. Is it dirty? Will it further the spread of COVID? The CDC says they're mainly focused on person-to-person contact, but while the central bank says they won't be destroying bills, they do have a contingency stock of clean bills ready to be released into circulation. All this while the FDIC and Office of the Comptroller of the Currency have asked banks to increase daily ATM withdrawal rates. They're citing that in the bank is the safest place for citizens' cash. Counter to all of this, the data surprisingly shows that from March 11th to March 18th, dollar banknotes in circulation rose nearly 2%. As reported Sunday by economist John Paul Koenig, the increase is the biggest since late 1999 during the fears of the Y2K bug. The relief bill, which passed both Senate and House last week, would see funds immediately go only to eligible American taxpayers with direct deposit bank addresses on file with the IRS. Those without an address on file or whose information is outdated would have to wait over 4 months. According to the New York Times, this means roughly 70 million people of America's more than 330 million will actually receive a payment in coming weeks. There had been talk of including a digital dollar in the relief initiative, but that was quickly wiped from the bill. Elizabeth Warren, who was named Thursday as an advisor to the Digital Dollar Foundation, a nonprofit formed by former CFTC officials, said paper checks may not be ideal, but, quote, the idea we could suddenly pivot is not realistic. Not being able to print checks not being ideal is an understatement. More than 14 million Americans don't have a bank account, which means they will be forced to use check cashing services, eating up 1 to 12% of the amount they receive. 1 to 5% is the industry average. The digital dollar is not new. It was initially proposed in an opinion piece in the Wall Street Journal by the former CFTC officials Christopher Giancarlo and Daniel Gorfin back in October. It is proposed to be a service directly from the Federal Reserve, which currently doesn't have the retail capacity to service individuals, but proponents say the infrastructure is there in existing service to banks and government entities. Because the Fed cannot default, insurance on such a service would be small, and the move would bring nearly 25% of Americans who are unbanked or underbanked more formally into the banking sector. Not unlike crypto volatility, the digital dollar was proposed in the first bill, removed in the update, then reinstated as a requirement in a subsequent submission. As of this recording, it's unlikely to move forward at this time, but crypto enthusiasts are salivating at the validation a US-backed digital currency would bring. Currently, China and the Marshall Islands are both working on issuing their own state-backed digital currencies. Due to the coronavirus, China has announced recently that it's accelerating its plans to release its digital currency and is now drafting the legal framework to support it. Cryptocurrency has been deemed the most convenient tool to translate a central bank's 0% and -% rate policy to commercial banks. According to the Global Times, Alipay, the financial arm of Chinese tech firm Alibaba, publicized 5 patents related to China's official digital currency from January 21st to March 17th. The patents cover elements including issuance, transaction recording, digital wallets, anonymous trading, support, and assistance supervising dealing with illegal accounts. An insider close to the release said, quote, judging from the patents, the first step of technological development has been basically completed. In other news, it's yet to be seen what will happen with the price of Bitcoin as mining companies are reporting COVID concerns. Deemed non-essential, companies don't have access to their rigs, workers are in isolation, and supply chains are seizing with border restrictions and factory closures. This comes at the same time the world's largest manufacturer of Bitcoin mining, Bitmain, which produces ASIC miners, has sold out of its first round of domestic Antminer S19s within 24 hours of accepting orders. There is controversy around delivery dates as they are slated to ship 1 day before the predicted Bitcoin halving on May 12th. A United States District Court has granted an injunction against Telegram, the messaging app used by reported 1 billion people around the world. The court prevented the company from issuing its Gram tokens, citing sufficient evidence from the SEC to argue that the tokens are a security as measured by the Howey test. The case has been ongoing since October of 2019. Despite filing a Form D, or Notice of Exemption, the court argued that the intention was for the tokens to reach the secondary market. So the initial sale to accredited investors was not qualification enough to grant an exemption. Perhaps the biggest implication of the Telegram case is its impact on the ICO, or initial coin offering model. Telegram argued that the Gram token would become a commodity once it was actualized, therefore excluding it from SEC purview. The court, again citing the Howey test, said the evaluation must encompass the entire life cycle of an offering, and this investment contract had the expectation of sale and distribution of the Gram. The court blocked distribution to initial investors as it would represent a risk of, quote, near certain future harm in the potential public distribution of the token. In more positive moves, Italy's Banca Sella has launched a Bitcoin trading service to the 1.2 million Italians already using the bank's digital platform Hype. Currently in beta testing, the bank said it uses blockchain and using the lockdown as an opportunity to support interest in more secure, cheaper ways to transfer funds internationally. This comes after a blockchain voting system was developed in Naples in 2018, and two high schools, one in Rome, the other in Crotone, will begin issuing diplomas on Ethereum's public blockchain. The schools report interest in easing verification and shareability, as well as decreasing fraud. Finally, a study conducted in part by UCLA finds the blockchain technology can save the pharmaceutical industry over $180 million each year through drug verification systems. An estimated 17% of prescription drugs are illegally or incorrectly dispensed in the US, and in 2023, validation for these systems will be mandatory. A current pilot project called BruinChain across 200 clinics says the system can, quote, track and trace drugs as they move through the pharmacy while verifying the legitimacy of the drug with the manufacturer before being administered. Barcodes placed on the bottom of drug boxes allow for constant updating of custody and inventory reporting across the UCLA pharmacy system. It's important to note that the pilot is testing on a version of Hyperledger that is private, meaning it is permission and participation in the network is controlled, making it possible to track and verify the prescriptions and the drugs themselves while maintaining privacy and integrity of the patient data. Thanks for joining me. As always, reach out with any questions or requests. I'm here to help. I'm Shannon Ewing, and I'll see you next week.